Welcome back to the cryptoworld channel, everyone. My name is Josh, and in this video, I'll be talking about a long-term Bitcoin price prediction, looking at the 4-year halving cycles, and talking about whether or not we're still in the 4-year halving cycles. I'll also be looking at where we are potentially within this cycle, bull market or bear market. I'll also be looking at the effects of the Bitcoin halving and the US presidential election on the price of Bitcoin. I'll also be talking about a potential bull market top prediction if we're still within the bull market, and the same things for Ethereum later in the video. So definitely watch this video from start to finish so that you don't miss out on any of this important information. First of all, taking a look at the monthly Bitcoin chart. So each one of these candles is an entire month, and this is looking at pretty much Bitcoin's entire price history from around 2011 to 2012. And in case you're new to all of this chart right here easily maps out the 4-year halving cycles. So essentially there's a Bitcoin halving that happens roughly once every 4 years. And the last Bitcoin halving, the most recent one that just happened in April this year. And usually what we end up seeing based on Bitcoin's entire price history, we usually end up seeing the bull market start before the halving. We usually see a bullish recovery leading into the halving, and then we usually see a bit of a break around the halving, and then a continued bull market following the halving for roughly a year following the halving. And then we see the bear markets, the Bitcoin bear markets, occur right in between the Bitcoin halvings for roughly around 1 year or so. And now, of course, at some point in the future, the 4-year halving cycle will break down and no longer work. It's basically impossible that this will continue working for an infinite number of years, perfectly every 4 years. At some point in the future, there will no longer be the 4-year halving cycle. But for now, so far, it has worked throughout Bitcoin's entire price history. So if it continues to work for the rest of this cycle, we are due to see a continued bull market, potentially for the next half a year to 1 year approximately, and then somewhere around mid to late next year, basically. So around a year from now, we're likely going to begin the next bear market that will last for a year, and then we'll start recovering again out of the bear market, basically around end of 2026 going into 2027, and then the next halving will be in 2028. So that is just simply based on the 4-year halving cycles. Of course, nothing is 100% guaranteed, but that is based on what we've seen so far throughout Bitcoin's history. But of course, the Bitcoin bull markets don't always just go straight to the upside in a straight line. Oftentimes we see major pullbacks or even midterm bear markets, if you want to describe it like that, during the bull markets. And an example of this is basically the last bull market during 2021. So late 2020 entering into 2021, we can see during that previous bull market, we actually had basically in the middle of the bull market, a longer term bearish trend that lasted for almost half a year approximately. Because this chart right here, by the way, is the 3-day time frame. So each one of these candles is 3 days worth of Bitcoin price action. And on the right hand side, this is the current day price action on the same time frame. And on the left hand side, this is looking at the previous bull market back in 2021. And this indicator, by the way, is the super trend indicator. And so the super trend indicator effectively tells us the larger trends that are currently playing out if we're looking at the larger time frames, that is. And obviously here on the 3-day time frame, as we can see, it is relatively accurate. Of course, no indicator is 100% perfect, but this has been very accurate throughout Bitcoin's history, especially in recent cycles. And so essentially when it's green, that's indicating a larger bullish trend, which can also be a bull market. And when it's red, that's indicating a larger bearish trend on the larger time frames, which can also be a bear market. And so far during this cycle that we're in right now, we're seeing a very similar structure in the market compared to what we saw in the last cycle, where we basically had a major bull market near the start of this year, and basically the end of last year, we had almost a vertical bull market going straight to the upside, which was very similar to what we saw near the end of 2020 going into early 2021. And then it was right around March to April 2021, so in the early to entering into the mid-year, basically we started to slow down. The bull market started to stall as we ran into major resistance, and then this indicator flashed a major red signal indicating a larger bearish trend that lasted for the next multiple months. But this does not necessarily mean a 1-year bear market is about to start. It just means a larger bearish trend, which can also be a bear market, but not always a bear market, not always a 1-year bear market. And so once again, we played out that larger bearish trend during the bullish cycle, and we ultimately continued the bull cycle or the bull market later on and actually set a new all-time high later on after playing out that larger bearish trend. And on the right hand side right here, the current day price action, this super trend indicator on the 3-day time frame will flip into the green again. It will reverse back into the bullish direction if we see a confirmed breakout above this line right here, which is sitting at around 68 to 69,000. So basically, if we break out above around 69,000 with confirmation, so candle closes above that level, that would flip the super trend indicator back into the green on this time frame, indicating the continuation of the bull cycle, very similar to what we saw last time. And so around 68 to 69,000, that is the level to break in order to expect the continuation of the larger bull cycle and a new all-time high following over the next few months. And now what's very interesting is if we're taking a look at the effects of not only the Bitcoin halving, but the US presidential election on the price of Bitcoin. Now, this is not necessarily the election that's actually influencing the price of Bitcoin. Perhaps it's just coinciding with those 4-year halving cycles. But either way, looking at what the price of Bitcoin usually does before and after the halvings and the election right here, we can see that leading up to the halving, usually we see either relatively neutral price action bumping around sideways, or perhaps a slight bullish movement leading into the halving. And then right around the Bitcoin halvings, as we've seen in these previous years back in 2016 and 2020, and also this year so far, around the halving, we see a lot of choppy sideways price action, sometimes even a bit of a pullback over the next couple of months, like what we saw in 2016 and this year so far. And looking at the last 2 cycles back in 2016 and 2020, leading into the election, we actually saw more of a bullish movement start to play out. Not a massive bullish movement, but some more bullish price action starting to come into play leading up to the election. And then as soon as the election happened, we saw the Bitcoin price skyrocket both of these previous times here back in 2016 and 2020. So it didn't matter if a Republican won or a Democrat won, both of these times Bitcoin did its own thing and basically continued the bull market after the election. And so this will definitely be something interesting to pay attention to in the coming months as we're approaching that presidential election. Once again, leading up to the election, we might see a little bit more of a bullish recovery in the price of Bitcoin, just a slower bullish recovery leading up to the election. And then following the election, over the following months, maybe over the next year or so, we could see potentially a lot more bullish price action if we're going on what we saw in these previous examples right here. And just before talking about a potential bull market top prediction, first, if you want to trade any of these moves in the price of Bitcoin or any other crypto, personally, I take just about all of my trades over on Bybit, so I'll make sure to leave a link to Bybit down below this video in the description and in the pinned comment. And if you use that link down below this video to make a Bybit account and deposit on that account, then you can get up to a $30,000 deposit bonus, but only if you use that link down below this video. And also, if you use that link, it'll take you to this page right here, which is a massive lucky draw happening right now over on Bybit, where you could potentially win up to $100,000 just by trading crypto using the link down below this video. And so if you're going to be trading crypto anyway, you might as well check this out. Once again, first link down below this video. But for whatever reason, if you cannot access Bybit or if you cannot KYC on Bybit, there is Bitfinex, which is another crypto exchange similar to Bybit, but you don't need KYC for Bitfinex. So I'll also leave a link to Bitfinex down below this video. And if you use that link to make a Bitfinex account, then you can get up to a 5.5k deposit bonus, and only if you use that link, you can get an exclusive 10% discount on all trading fees on the Bitfinex exchange forever, only if you use the link down below this video to make your Bitfinex account. And so as another option out there other than Bybit, once again, there is Bitfinex. Links down below if you want to claim those extra bonuses. But with that being said, taking a look at this chart right here, this is on the monthly Bitcoin chart. So once again, each one of these candles is 1 month of price action. And if we're looking at the Fibonacci retracement tool, but looking first of all at the 350% retracement level right here, or the 350% extension level, I should say, that basically maps out the next bull market top. If we're looking at this first cycle back here during 2011, going into 2012 and 2013. And once again, this is based on the Fibonacci retracement tool, but looking at the retracement from the previous bull market top down to the bear market bottom based on the monthly candle closes this is, and then measuring out the 350% extension level on the logarithmic chart, the logarithmic settings. And so basically this is 3.5 times this area on the chart added to the upside here, as you can see right here. And then once again, that coincides with the next bull market top for the following bull market that played out. So essentially predicting the next bull market top. And then if we're looking at a logarithmic regression, so if we're multiplying this extension by 0.75% or 75% of 350 to the nearest 10 is 260. And so once again, if we're looking at the Fibonacci retracement tool from bull market top to bear market bottom based on the monthly candle closes, and then looking at the 260% Fibonacci extension, so that's 2.6 times this area on the chart right here, as you can see like this. And if we're looking at where the bull market top ultimately ended up at, it was right around that 260% Fibonacci extension. And then if we simply do the exact same thing again using the same ratio or the same regression, so 260 multiplied by 75%, that gives us 200 if we're rounding to the nearest 10, that is. And so looking at the 200% extension level from the retracement tool drawn from the bull market high to the bear market bottom based on the monthly candle closes, that gives us an extension of close to around $60,000, give or take, which was almost the bull market top for the next high. We actually went a little bit higher than that level right there, but that predicted very close to the next bull market top. And so throughout Bitcoin's history so far, this logarithmic regression and these exact ratios right here between these extension levels have so far predicted very accurately the next bull market top or slightly underneath the next bull market top, so that if you were to sell around these extensions, you would have done very well. And so if we simply use the exact same method for this cycle that we're in right now, looking at the retracement tool from the bull market top, the previous bull market top, down to the bear market bottom based on the monthly candle closes, and if we're getting the previous extension of 200% multiplied by 75%, that gives us 150%. And so looking at that 150% extension, that is sitting right at around 115 to 120 approximately, so basically just above $100,000. And now it's important to understand that nothing is a 100% guaranteed. And so even though this method has worked throughout Bitcoin's history, it basically predicting the next bull market top, of course, it does not guarantee that it's going to work this time around. And so this is simply just an estimate. So take it with a grain of salt. Once again, not guaranteed. It's just an estimate based on this method that we've seen throughout Bitcoin's history. And once again, we need to see a few things happen first in order for this to actually take place. First of all, we need to see a confirmed breakout above around 69,000 here on the 3-day time frame to flip the super trend indicator back into the green and expect a continuation of the larger bull market like what we saw in the last cycle. And we're likely going to need to wait to see the election actually take place, because once again, most of the bullish price action, simply based on what we've seen in these previous bull markets, occurs following the US election, no matter who wins, whether it's Republican or Democrat. Both of these previous examples right here, we still ended up seeing a major bull market following the election. And if we're taking a look at the same thing but for Ethereum, this is on the weekly time frame, looking at the 2016 election, the 2020 election, and of course the upcoming 2024 presidential election, the US presidential election. And we can see in this first example that we saw a lot of sideways price action and even some slight bearish price action leading into the election, and immediately following the election we actually saw a bit more bearish price action. But then around 1 to 2 months after the election, a few months after the election, we started to see much more of a bull market really start to play out. And if we're looking at the 2020 election, leading into the election, we saw a lot of sideways price action, relatively neutral price action, and then we started to gain some bullish momentum right around the election. And then around a month following the election, we really picked up that bullish momentum and continued with a major bull market following the election. And so simply based on these two previous examples right here, if we're looking at the current day price action, it's likely that we could trade relatively range bound into the election, basically slight short-term bullish and bearish price actions, the choppy sideways price action leading into the election as one of the most likely scenarios. And then following the election, perhaps after a couple of months after the election, we could potentially see a lot more bullish price actions start to play out if we're simply basing things off these two previous examples. And with that being said, taking a look at this Ethereum chart on the monthly time frame, looking at the Fibonacci retracement tool, but taking a look at the previous bear market back during 2018, from the bull market top down to the bear market bottom, looking at the Fibonacci retracement tool to take a look at the 1.382 Fibonacci extension. And in case you're new to all of this, the reason why that number is so specific is because the 38.2% is an important Fibonacci level. In fact, the second most important Fibonacci level behind the 61.8% Fibonacci level. And so this is just simply looking at the 38.2% Fibonacci level, but the extension, so adding a 1 in front of it, so extending it beyond the high. And what's very interesting is if we're looking at that Fibonacci extension, it's almost coming perfectly into play to the nearest $100 or so, within $100 to $200 of that next bull market high. And what's also very interesting about this Fibonacci retracement tool right here is if we're looking at the 50% retracement level from that bull market top to bear market bottom in the previous cycle back during 2018, we can see the 50% retracement level, first of all, acted as major resistance when we were in the recovery stage coming out of the bear market. And then when we eventually saw a confirmed breakout in the price of ETH above that 50% retracement level, we ultimately saw a major retest. So we basically had to see a major retest of that previous significant resistance to flip it into new support before we could then continue on with the bull market. And if we're looking at the current cycle, what's very interesting is if we're looking at that 50% retracement level, which is an important level on the price chart, that also perfectly acted as major resistance multiple times for many months here during the recovery stage out of the bear market leading into this next bull market. And then when we eventually saw confirmed breakout above that 50% retracement level, which was sitting just above $2,000, we saw a lot more bullish price action over the next few months, but we never really retested that level. So right now, we've finally come back down to actually see the retest of the 50% retracement level like what we did last time. It's just this time around, we ran a lot higher first of all, before then seeing the retest a little bit later. And so for as long as we're holding above that 50% retracement level, we could potentially continue on with a bull market later, especially if Bitcoin continues on with a bull market. Ethereum will likely follow with what Bitcoin's doing. And so of course the point of invalidation where things would basically break on this chart right here would be if we broke back below the 50% retracement level, which is sitting at just above $2,000, around 2.1k give or take. If we start breaking below around $2,000, then of course that would basically invalidate this entire chart right here, because that did not happen last time. And now if we continue on with the bull cycle after seeing this confirmed retest from the 50% retracement level like what we saw last time, then in that case, of course, the next major target would be the previous all-time high, which is close to $5,000. But if we're looking at that same Fibonacci extension, the 1.382 Fibonacci extension from the bull market high to the bear market bottom based on the logarithmic settings, that extension is actually sitting at around $9,500, so 9.5k. And now, once again, it is important to understand that I am not saying that the price is definitely going to go there. This is just simply an estimate based on what we saw in the last cycle and could very well be very wrong. So take it with a huge grain of salt. And remember, this time around, we've already seen the cycle deviate from what we saw last time, with the price basically extending further beyond the retracement level, the 50% retracement level that is, before then seeing the retest. And of course, if we break back below 2,000, that would would invalidate this entire situation, because basically that would be a bearish signal and not what we saw last time. And now if we're taking a look at ETH BTC, this is Ethereum versus Bitcoin on the weekly time frame. So in case you're new to the channel, basically this is Ethereum priced in Bitcoin. So if this chart is going to the upside, it means Ethereum is outperforming Bitcoin. Or if this chart is going to the downside, it means Bitcoin is outperforming Ethereum. And so in other words, not financial advice, but how this would work practically is if this chart is bullish, it would make more sense to hold Ethereum over Bitcoin. And if this chart is bearish, it would make more sense to hold Bitcoin over Ethereum. And as we can see here, over the last couple of years, this chart has basically been in a major bear market. So a massive bearish trend that has lasted for around 2 years, give or take. And at least for now, if we're looking at the price action alone, there's no real signs that this bear market could be ending anytime soon. But if we're looking at the weekly RSI for the ETH BTC chart, this is getting extremely close and almost just about entering into oversold territories for the first time since around October last year. And what happened last time was basically a lot of sideways price action over the next couple of months, and then a bit more of a bullish relief following that. But this is not necessarily a trend reversal signal. So ultimately, a few months later, we continued the bear market or the larger bearish trend later on, but it did result in a bit of a break or a relief during that larger bearish trend. And we saw something very similar back here during the middle of the 2018 ETH BTC bear market. As we could see, when the RSI on the weekly time frame entered into oversold territories, that occurred very close to a local low in the price before we were due to see a major bounce. But we ultimately continued the bear market later on, and then we entered into oversold territories again, and finally that time around we did bottom out. But once again, this signal does not necessarily mean that we're at the bottom. It just sometimes means that we're due to see a bit of a relief in the short term during the larger trend. And we also saw basically the same thing back here in mid 2022, where we saw a very close to oversold signal. That time around, the RSI did not actually enter into oversold territories, but it basically got right on the edge of oversold, and we still saw a major bounce over the next 1 to 2 months, but we continued the bear market later on for ETH BTC. And so even though we're still in a bearish market for ETH BTC, this is, of course, over the next 1 or 2 months, potentially, maybe after a little bit more short-term bearish price action, but very soon we are due to see a little bit of a relief as the RSI approaches these oversold territories here on the weekly time frame. And we can only start to be more confident in a bull market starting to play out for ETH BTC, basically Ethereum starting to actually outperform Bitcoin on the larger scale here, if we actually see a confirmed breakout above this descending line of resistance like what we saw in the last cycle back here. Because the moment we broke out above that huge descending line of resistance, we basically flipped into a major bull market, at least for the following year approximately, for ETH BTC, which means Ethereum outperforming Bitcoin for a solid year. But for now, the current ETH BTC price is still a long way from that happening, because we're not even close to that massive descending line of resistance, at least as of right now. But once again, very soon, perhaps in the next 1 or 2 months, we are due to see a bit of a relief during this bear market or larger bearish trend as a result of oversold territories being hit in the weekly RSI. And so overall, those are the outlooks and the things that I'm looking at for Bitcoin and Ethereum on the larger timeframes for the coming months, maybe over the coming years. And if you enjoyed the video, hit the like button down below and leave a comment of your predictions down below this video and what you think about these longer term prediction videos. And as always, if you want to trade these moves in the price of Bitcoin or any other crypto, check out those links down below this video to claim those extra bonuses. And if you want to actually know how to trade crypto, no matter if the price is bullish, bearish, or chopping around sideways, then make sure to watch these videos popping up right here on your screen. The video in the top left shows you how you can profit from bullish or bearish price action using long positions or short positions, and the video in the bottom left shows you how you can easily profit from choppy sideways price action. But anyway, that is everything that I have to say for today. I really hope you enjoyed, and I'll see you all in the next video.